All right, smart money, SMSFX mentor.com, right? So listen, gang, today we're going to go over something very, very important, right? So a lot of you guys been asking me, how do you trade chart patterns? What are chart patterns? What are the most important chart patterns? What chart patterns do you trade, right? So pretty much I'm just going to go over a few of them. I'm going to show you guys how to trade uh, a few different chart patterns on the charts. Okay, guys. So we're going to go over the trading view. I'm going to show you guys how to exactly trade a few different chart patterns. All right. So I would not solely depend on chart patterns by themselves. Okay. They definitely have to come along with different confluences. They definitely have to come along with different um, um, confluences in the market. All right. Definitely would not use them solely by themselves. And I would not just depend on them because it's so many times in the market where you can see uh patterns, different patterns, and they totally fail. Okay. So I mean, when I say totally fail, a head and shoulders pattern could be literally inverse head and shoulders pattern. You think price gonna go up, boom, boom, it hit news, anything, economic news, anything come along, and boom, price always shoots down. Okay. Sometimes it shoots in your direction, right? Before shooting down. Sometimes it shoots in your direction and be okay. Uh Head and shoulders pattern, regular head and shoulders pattern. You like, okay, it's for sure finna go down. You get in, boom, price go down, shoot straight up, or go shoot straight up. You know what I mean? So you don't want to depend solely on them. But let's not waste any time. Let's get right into it. Um, and let's go ahead over here and look at the charts. Guys, gang, we do offer mentorship. Okay, we do offer mentorship. Okay, 7 days a week, 24 hours. All right. So that means anytime you can get on the phone with me, you can get on a call with me, and we can go over a pair, look at a pair. Okay. We go from risk management, risk to reward ratios. We go from psychology to methodology, right? We go from what trade, what session you should trade that benefits you. We go over what pairs to trade while trading those sessions. We go over different strategies that will work for you depending on whether you're a intraday trader, uh, a scalper, or a long-term trader. Okay, guys, we have all of that set up if that's what you're trying to do. Like I said, you can go ahead and check that out. But guys, do not try to bash me on what I'm showing you and what I'm doing. I don't have a million years to come on here and tell you guys exactly every single detail on how I trade and all that with just a short YouTube video, okay? So if you want that type of information, or if you want that type of mentorship, then come over and holler at your boy, all right? But this is something that you guys need to be learning no matter what you're doing in life, okay? No matter what you're doing, you could be doing the best, you could be going to college, whatever, right? You want to be able to learn how to dig into the market to be able to get the type of money that you need, maybe for rent, food, car, gas, car expenses, fixing it, kids, whatever else, right? All right. So the top ones that I want to go over are we want to go over double tops and double bottoms, okay? We want to go over head and shoulders, right? Head and shoulder pattern. We want to go over wedge chart patterns. We want to go over rectangle chart patterns, which is like consolidation almost. And then we want to go over bearish and bullish pennants, okay? Um, we could take a look at harmonics, which is like triangle chart patterns and things of that nature. But like I said, just to name a few, we don't want to go too crazy. And like I said, guys, a lot of people give you rah-rah, right? They give you the runarounds, right? I just want to be straight to the point, and get straight to it and continue and keep it pushing, all right? So right here is the first example. We see a what? Double top, okay? So pretty much we have two patterns that pretty much align with each other, right? Let me see. Should I use? I want to see what I want to use. Arrows, maybe. Okay, so we see price. Boom. We see price coming here. Boom. It shoots up to this point. Boom. Shoots down. Right. Boom. Then it shoots back up to this point, and then boom, price just literally sails off. Another example. It's right here. Okay. Boom, price shoots up to this point right here, pulls down a little bit, shoots back up to this point again. Boom, it just drops. Okay. So those are considerably double tops. Okay. Now we want to find some example of double bottoms, right? So then we come over to here. right? And so this is what you look for in the market. Now, like I told you guys, it's going to be multiple confluences with this that'll make it so much easier, that'll make you really understand it. You just catch on, you say, dang, okay, boom, wow, I didn't know this, right? And so, like I tell you guys, full detail, you want to go over there to the mentorship and get the private mentorship. Or you can do the free course that I do offer as well on Telegram. You can click the same link over there, do the free course. Boom, you'll get a lot more detail than what we're doing on YouTube. Okay. Um, but okay, you got price selling down to this point. Boom, buying up. Okay, selling back down to this point. Consider a double bottom. Okay, price hit this point. Boom, and start shooting up. All right. As you can see, start shooting up crazy. All right. So things of that nature, that's what you pretty much want to look for. Same thing that happened here. Um, boom and boom. It's considered a double bottom too as well, right? Because price still closed above this point. So boom, it came down here, boom, pushed up, boom, came back down here, boom, and then price is selling to the upside. Now, the tricky part is to find head and shoulders patterns. All right. But they're not too tricky, okay? Because here we go. I got an example right here. So let me see. Do I want to use? Yeah, I'll do. I'll use the eclipse so it can be a lot prettier. So we have a shoulder right here, right? So we have a left shoulder. Okay. We have a head. Okay. Then we have a right shoulder. Okay. Now it's not going to always be pretty, right? We know that. Okay. Everything, forex market is not always super pretty, but there goes shoulder, there go head, and there go the second shoulder, and then price pushed up to that point up there. Okay. Um, so like I said, guys, something that they're very, very simple. I would not stand on them alone. I would definitely, you know, go over all the videos that I got out, try to find you a lot of confluences out of those points, and try to make sure that you make sense of what you're doing. All right. So that is this is what you would call an inverse head and shoulders. Okay. So that means that it's the opposite way of a head and shoulders. Head and shoulders is obviously me standing up, right? You see my head, you see my shoulder, you see my shoulder, boom. And then inverse is obviously me upside down, right? Shoulder, head, shoulder. Okay. Now let's go find a let's go find a head and shoulders pattern. Okay. Let's see if we can find a head and shoulders pattern this way. They're not gonna be pretty though. I promise you that. They're gonna be sloppy sometimes. Here go one right here. Okay. So as you guys can see, here go a head, right? Well, let's start with the left shoulder. Boom. Let's go with the head next. Boom. And then let's go with the right shoulder, okay? Like I said, they won't be perfect, but they will pop up, okay? So this is what you consider a head and shoulders pattern. This is a regular head and shoulders pattern, okay? You have a left shoulder, you have a head, and then you have a right shoulder, and then what do you have? Price just melting like a melting pot, okay? Like I said, once again, I would not just use these based off just alone, right? I will definitely go check out more confluences or look at different type of confluences in the market. I'm just bringing you awareness to how they look, how they usually work, and how you can pretty much enter, right? So you will pretty much enter after price breaks this neckline right here. So this is what you consider the neck right here, and then boom, price continue to go down. Sorry about that. I didn't even tell you guys how to enter the double top. So the double top, same thing, boom. You get that hit right here. You really want to enter in right here, but you can definitely enter that break of that neckline, all right, and then continue price on down. So it's pretty much the same difference over here. Inverse head and shoulders, right? You want boom, you want hit, you want this second hit right here, and then you want to literally break this neckline somewhere around this level or this level. You want, and then that's where you want to get in at. These are the examples that I mean that, hey, price might not get to the next level. It may shoot up. It may respect the head and shoulders, but obviously price continue to go down. Okay. So you just want to be very, very mindful of that and just make sure that you understand what you're looking at in the market, what you're looking for. All right, wedge patterns. Wedge patterns are patterns where they just like kind of squeeze into like a certain point and then it just kind of break out. So we can kind of use this as an example of a wedge pattern. And so more than likely you're going to be using trend lines and things of that nature when you're using wedge patterns. All right. So, something like this, right? You got price literally pushing in. Then it gets into this point right here where it literally is just pinched in there, right? And it's pinched just like a ketchup packet, right? So you do a ketchup packet, guess what? Keep squeezing, then soon, boom, all the ketchup's gonna pop out. So that's pretty much how that happened right there. And that's pretty much how that move right there occurred. Okay. Um, and so those are what you're looking for when you're looking for those type of wedge patterns, pennant patterns, and things of that nature. Uh, Same here. You're looking for some form of price literally squeezing and squeezing into a tight spot, okay? A tight little spot, and then obviously spitting up out of there, okay? Let me try to find one to the downside, same difference. Boom, uh, boom, okay. Price gets down into there, boom, 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 start squinting and squinting and squinting and spit it all out, okay? So those are our prime examples. That's one. So those are something that I could say that's legitly like that's how you pretty much I pretty much don't even use patterns and things of that nature these days, guys. I do check them out. I do mark them off sometimes if I see them, but I pretty much stay away from patterns because I know how the market really moves, right? So I understand how the real key or the real reason why markets is moving. And I understand when to enter into the markets when they are volatile and moving, as opposed to just worried about because more than likely when you see any type of shape or pattern or anything like that, it's a consolidation. Okay, gang. So I'm just gonna give y'all that as a key that you look out for. Every time you start seeing patterns form up, price is consolidating. So it means it can do whatever. It can literally fluctuate between that area or that zone for a minute, and then you'll still be, oh well, it did this head and shoulders pattern, da 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 da, and all that. Yeah. So, anyways, more than likely it's some sort of consolidation. So rectangle patterns. All right. So now we come over here, we go to the rectangles, and we can kind of see one right here, right? So it just gave it away right here, right? Boom. So what you want to do is obviously price gonna be breaking, breaking, breaking. Even if you stretch that over across, right? Gonna be breaking, 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 going back and forth, then it finally busts through there, right? Retest there, obviously, and continue to push up. Okay. So that's pretty much what you'll be looking for when you're looking for those rectangle patterns, is you'll be waiting for price to literally, it'll be ping ponging back and forth, but actually moving sideways, right? And then it'll finally break up out of that point, giving you at least direction, right? So, okay, boom. This is a reversal. Price is not going to continue to go down. Obviously, it broke out to the upside. Price at some point going to continue to go up, right? Put your stops anywhere behind this box here, and you can ride that bad baby on up. Um, and so that was a example of an up one. Let's find a rectangle on the downside, which any of these you can pretty much say, okay, boom, this is a bigger rectangle, but at the end of the day, it kept ping ponging in this rectangle, boom, 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 until it finally broke outside of this sideways movement and continued to go down to the downside. All right. It's not a prime example, but it is an example. Okay. It's pretty cool. Same thing here. You can kind of go through the whole thing and mark them out. But yeah, kept going pinging back and forth, ping pong, boom, 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 boom. It finally, out of this sideways movement, broke out and started going down to the downside. All right. So these are what you call rectangle patterns. And then pretty much bullish pennants, stuff like that. Same thing. And triangle patterns are all the same thing. So really at the end of the day, it's almost like um 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 it's almost like you only really need to know the main basic ones, right? So you can kind of have something like that. Boom, right? These are what you get off into harmonic. That'll be later on down the line. And pretty much like at this lowest point, price shot back up to this highest point here, right? Um, you know, that's that triangle effect right here. Um, and that's not, like I said, that's not the best example, but it's an example of what's going on. Same thing if you come right here and you look, boom, inverse triangle, right? But like I said, this is harmonic. You don't want to get off into harmonics. And then obviously once it broke, this triangle sort of boom, it came back down, retesting these lows here. right? So same difference, upwards or downwards, all right? Like I said, I don't want to keep these videos too crazy or too long or anything like that because then you guys fall off and you don't want to watch the video. But if you want to go into further depth, like I told you guys, smsfxmentor.com, I got a free course on there. And we also do private mentorship, and we can go in full detail on how the market actually works and how you can start making profits as little as or as quick as today. Not saying you're gonna be a millionaire. Work that 9 to 5, grind until you get this right. Once you get this right, then you'll quit that 9 to 5 and you'll be smooth selling. All right. Um, uh, hustle. Don't spend rent money, don't spend your bill money on the Forex market, right? Use demos until you can get to the point where you want to be. And then still don't use the money that you've been saving or the money that you inherited or any of that, right? You go out and you hustle for some money and then you put it into the market. And then it'll be a difference. You'll understand that, okay, you're risking the money that you're risking. So you got to understand the only way you're going to make money is to be able to risk it. So if you want to make thousands, you got to be able to risk thousands. You want to make hundreds, you got to be able to risk hundreds. Okay. Remember that. You want to make millions, you have to be able to risk millions. All right. Other than that, you're just wasting your time and thinking that you're going to get rich scheme real fast off of day trading, right? Um, you got to be smart. You got to be strategic about everything that you're doing in this market, or it will swallow you up, eat you out whole, spit you out. All right. SMSFXmentor.com. Let's get it. Gang, gang, gang.